Just a quick introduction. I'm John Velissarios. I'm Managing Director looking after digital assets custody and central bank digital currencies at Accenture. I'm the global lead for this area. I've actually been in the security space for 20-odd some years. I have a background in cryptography, so I know that these topics are very close and dear to my heart. So I'm not the sales guy, actually. So I'm quite technical, and I got into the space because I believe that this was sort of the future where the next evolution and revolution of where money is going, actually. And I looked at it very much from a deep technical perspective. So I spent a lot of time in working with HSMs and hardware devices and in the traditional banking space, and then pivoted and went into the crypto, and then finally into the more blockchain DLT and CBDC space. So just a little bit of background about me. I'll skip over this very quickly, but I just want to say a couple of things. Accenture is a big multinational organization, offices all over the place, 500,000 people, very complex organization. But inside that organization, we have a group that focuses specifically in this area. We also have a very large security practice, but we also look at specific topics like this, and blockchain, and specifically in CBDC. Our very first blockchain project in the firm was a project that I sold, so I was a sales guy. And delivered as well. So I did the delivery of it and spent a year doing that several years ago. So that's how I got into central banks and CBDC. You may have seen publications about CBDC and the various topics. Revolution of Money was sort of the first white paper that we wrote about it, actually. First, there's a couple of iterations of that. But then there's also project work that we've done. And this is all the public stuff. So there's a lot of non-public things that we have been working on. But these are the public papers that we've done, sort of Project Jasper in Canada, Jasper Ubin in Singapore, ECB project that we worked on anonymity, of course, about sort of central banks and digital currency and anonymity and privacy of transactions. And then ultimately other things as well. So a lot of stuff that's not on this page. There are other projects that we're involved in, leading and delivering. You may have heard of the Corona project in Sweden. So I'm the project lead of that engagement. So besides sort of spending a lot of time here in Switzerland, working with a large digital exchange with Vince, also leading that engagement in Sweden as well. So it's a multi-year implementation of the e-Corona. So, and there's other project work that we're doing. You may have heard about the Banque de France and the work that the Banque de France is doing on the central bank digital currency side. So we're also leading that engagement as well. So very active, as you can see, in the space. But what is it, actually, before we start talking too much about it? What is it? It's basically a third form of money. At the end of the day, we're talking about central bank money. We're not talking about commercial bank money. We're talking about a liability issued by a central bank, but in a digital tokenized format. And we have a certain, I guess, standard that we talk about when we talk about this. We refer to it as a digital bearer instrument, so it's something that can be transacted peer-to-peer, just like a banknote, but in digital form. So that removes sort of the space and time boundaries, which I think is necessary in the digital world, and where we see sort of the evolution and ultimately the revolution of money sort of taking place. So that's what we talk about when we talk about CBDC. There are many sort of different, I guess, interpretations of this as well in the marketplace as well. So we have to be careful about the language. People say, well, money is digital anyway. We're talking, that's commercial bank money for the consumers. It's digital in central bank world with reserve accounts. That's also digital, but it's not a tokenized form of that. So there are some specific language that we use with regards to that. So we'll cover it hopefully in the presentation, and you can always ask questions later about that. Why is this relevant? There's a lot of stuff that's happening around the world. So central banks are focus is intensifying in the space. If you take a look at PBOC, People's Bank of China, the E1 initiative, there's been a lot of activity in this area. They've announced, they're piloting, and they have 4 banks in China now using it in mobile applications. And it is a tokenized form of central bank money being moved around between consumers. We also are involved in the Digital Dollar Foundation. So myself and Vince primarily spending a lot of time on that, working on the Digital Dollar project. You may have heard about that. That's also something that's happening, but it's about sort of the modernization of the dollar, along the same lines. ECBs, working in this area, and then there's also the sort of institutions like Libra or Facebook that are also dabbling with this idea as well. 80% of central banks are experimenting. So this is a BIS white paper that was written at the beginning of this year. 80% of central banks are experimenting on this topic, and 10% are close to implementing. And I would say that's roughly right, I think, given our experiences and what we know what's going on. So this is not something you can ignore. It's happening. There's a lot of advanced research, experimentation, a lot of work that's going on. I mentioned before some of the projects. It's all over the place. There's no geographic restriction on this. It's a global initiative that's taking place. And we see a lot of activities from Asia through to South Africa with the Reserve Bank, the South African Reserve Bank, as well as Europe and North America as well. Canada is very active in this area. And then also the Caribbean, the East Caribbean Central Bank is also talking about issuing a sand dollar and doing that as well. So lots of stuff going on. The vendor ecosystem is emerging, and that's a very important point. There's a lot of feature-rich capabilities like tokens, specifically cryptographic tokens that are moved around, wallets to store those tokens in, and ultimately vaults, HSMs, where you store that from an institutional perspective. There's a lot of things around sort of functional areas like performance and scalability and security are very important topics. And now more and more there's focus on that, and we've also been involved in a lot of that work as well. And then finally, interoperability and standardization is also a key topic that I think will be absolutely necessary before we can more broadly adopt it. So, but it's emerging and it's developing quite rapidly. Our experience as well has shown us that there are a variety, emerging optimal configurations that are popping up. And that's primarily driven through very precise requirements. And I'll talk a little bit about that, and then we can cover that in the slides that Vince will walk through afterwards, which are very important. And it's basically, if it's driven by requirements, it becomes a lot more, tangible in terms of the solutions that are materializing. There's also a very, very optimal sort of configuration that we've seen in terms of the balance between stakeholders, those that are involved, the banks, the commercial banks, and ultimately that alignment is non-trivial. We have commercial banks, central banks, consumers, merchants. There's a lot of industries and interests at play. And this is not a technology problem. That's sort of more of a commercial and industry challenge as well. And there's a lot of forces there that need to be considered. And this is ultimately a multi-faceted activity, and lots of technology and commercial considerations that take place. Emerging trends, I'll talk to this a bit more quickly just to cover the points, but there's a lot of token-based asset exchanges that are popping up, tokenized cash in different forms, token-enabled systems that allow you to sort of augment the existing systems, and hybrid solutions that are emerging as well, and we're also developing those, and then the convergence of all of that coming together. So if I look at the initiatives that are focusing on the asset side, and we look at exchanges that are looking to trade or issue and trade those assets, we end up with the challenge, of course, of how do you settle that? And then the settlement side is the cash component. So from our perspective and from our point of view, we need to be very careful that we're not solving half the problem, because I would say the assets is very interesting, but when it comes time to do an end-to-end trade and a settlement, that the cash component is also there as well. So it's very important that we have that part of it, and the CBDC is the highest grade of that cash that we have, that we're working with, and not sort of commercial bank. Evolution of these in these trends, you see sort of digital assets. Of course, this is sort of already in flight. Bank issued digital assets is sort of current stage of where things are going live. So industries or banks, commercial banks, and fund managers, asset managers, and so on are talking about the asset side. What we see is sort of the next stage is really where the central banks and the digital currency sort of come in, and then finally sort of creating this token economy. So a complete digital end-to-end where assets and cash are both represented and tokenized and moved around. And that's where security is an absolute requirement for that at the highest level and the highest grade. Alternatives. So there are things that have happened in the last X many years with the sort of release of Bitcoin initially several years ago. with non-bank corporation coins like Facebook coming out with Libra, also very interesting but specific. Stable coins, bank coins as well, so JP Morgan and other banks that have issued their own coins and put them out in circulation for their own users and their own sort of internal settlement needs. And then ultimately sort of consortiums that are coming together, so banks coming together and developing their own. But ultimately what we believe is that that's great, but these are all sort of stepping stones towards something that is of the highest quality, which is central bank money. And that is a liability of the central bank with the highest, no default, no credit risk, and it's ultimately sort of something that is completely fungible for end users, consumers, and merchants, and so on. And that, for the, I guess, for international standards, you need to use that for financial market infrastructure players to settle in central bank money, and this is why it's important for us to have CBDC as part of that. These kind of initiatives that are sort of popping up. So if I look back and then say, central bank CBDC is not developing on its own. It's developing because the market and the ecosystem is developing around it, and it's sort of creating the demand where central banks can now come in and provide a third form of money. Form number one is reserves in a reserve account. Form number two is banknotes in circulation, and this is a sort of convergence, a digital version of those banknotes, tokenized form of money. And on that note, I'm going to hand over to Vince to talk more about the next part of the presentation.
Thanks, John. And as you just introduced the three forms of money, paper, electronic, and CBDC. And really, I'm going to skip through a lot of this because I want to get to the technical aspect. We've got an architecture slide, I promise, so it's less sales and less focus on CBDC and more focus on architecture in a moment. But I just drive home the criticality of central bank money in that we as individuals, the only form of money that's accessible to us that is central bank money is banknotes. When you have a bank account balance, really all you have is a claim against your bank. That's what's known as commercial bank money. So as the demand for cash, and this is much less applicable in Switzerland because of negative interest rates here, but at a global standpoint, cash is the circulation of physical banknotes is decreasing for a variety of reasons. But what that's also doing is making it less accessible for individuals to have this credit-free or this default risk-free asset that's really matters when it really matters, when it needs to matter, such as financial distress. So the advantage is taking the best benefits of paper money, banknotes, and electronic money, which is not, the CBDC is not to replace either one of those two completely. It's to take the best benefits of both of them, because paper, there's an obvious inability to transfer large volumes or trade it quickly because it requires a physical movement of banknotes from one individual to another. An electronic is an account-based system, so you have to have a counterparty basically keeping track of those accounts. Banks have the ability to have those accounts at the central bank, but we as individuals and most commercial entities, non-financial entities, don't have that ability, so they have to interact with a bank. CBDC bridges that gap, and it's, as you can see in the middle of this money flower, central bank digital tokens, general purpose central bank digital tokens, serve both the individuals, they serve the wholesale needs of financial institutions, and really sort of, like I said, take the best benefits of both banknotes and account-based electronic money. I briefly touched about this, the declining use of cash. Consumers are the ones that are mostly paying in cash, and it's very geographic dependent in terms of what the current usage is and what the demand is. So, for example, in the US, 26% of transactions in 2018 were done with physical banknotes, which is actually higher than what I expected. I think it's a bit higher in Switzerland because of, like I said, because of the negative interest rate environment and to be honest, how beautiful your physical banknotes are. Oral Fusely does a fantastic job printing banknotes here. But globally, it's declining. So it's forecasted to decline by almost 40% in 2020. So how do you give the accessibility of that type of money back to individuals? And the solution is CBDC, which can be on your phone, it can be on a smart card, it can be on your computer, it can be held at a custodian bank, which I'll get to in a moment. So in terms of token-based retail CBDC, which is what we focused on. So there's, in the financial markets today, there's really two separated tiers. There's the wholesale market, which is only financial institutions, and they interact with the central bank. And then there's the retail market, which is everything else. So non-financial institutions, individuals, everybody else. And like I said, it's a game of accessibility. So many CBDC projects right now focus on just the wholesale level, which is already pretty efficient in a domestic market. Very efficient transferring between banks using that account-based system. So the interest globally is focusing on the retail aspect. How can consumers interact with it electronically and still have all the benefits? Token versus account is a very hot topic because that drives a lot of the design decisions and a lot of the functionality that's possible. And as John alluded to, when we talk about a digital token, what we mean is it's a bundle of information that if I want to transfer to somebody, I can give that bundle to them and they can look at that object and verify that that transaction is valid and that they receive the value, which is a bit more difficult than it seems when it comes down to electronic versions of money. So it's not reaching out and saying to your bank, I would like to transfer John $100, and the bank verifying that I actually am the person affiliated to my account and sending it to John. It's how can I do that without the bank's involvement checking my identity? And it's that authentication and authorization aspects that really compress down into a token, such that physical or the electronic transfer itself actually transfers the value. Preservation in a two-tiered model. So the way physical banknotes are distributed today is they are only distributed through the banks, physical banknotes. So when you go to an ATM, you withdraw your banknotes, but at that point it's in your pocket and they're yours. So what our design focuses on is maintaining that relationship between the financial institutions and the central bank, but then allowing and ensuring that all the consumers below, millions and billions of consumers around the world today, they only interact with their current financial institutions. So aspects like KYC and AML and all the checks that need to happen depending on the local jurisdiction and the regulation, they still happen by those same entities. The central banks don't have to act as that role, but it's just like the distribution of physical banknotes. So physical banknotes, the distribution flows from the central bank to the commercial banks, to the individuals, but then they circulate, and they're totally fungible tokens at that point. In terms of token features, so this is what we think really, this is a very brief summary of what we define really the key aspects of what a token is. So widely accessible to consumers, that's very important. So it's accessible to everyone, at the individual level. Peer-to-peer payments, so should not need that check out to a central account holder or really the maintainer of those accounts. Offline payments. What happens in the event of you trying to transfer electronic value and the internet's down or there's no electricity? How can we craft a way, like I said, to transfer that bundle of information from one individual to another such that that individual can verify it and be sure that they receive that value? And then another key point is sovereign national payment rail. So there's already payment systems in developed countries that do the job very well, but making sure that a token-based CBDC system maintains that sovereignty. So, for example, does not cede that power to another country or to a consortium of countries, as we've seen around the world when that happens, just like the SWIFT network. Countries, especially like the Americans, like to put political pressure on entities like that and suddenly to put executives in jail, as they did with Credit Suisse a number of years ago. And put pressure on SWIFT through the EU and through laws. And all of a sudden, this global network becomes a central pinch point in terms of the operation of the whole thing. So maintaining the ability of a central bank to remain sovereign within its domestic country is critically important. And that's why interoperability amongst those domestic networks is going to be, I think, the challenge, in the upcoming days. So here's the architecture I promised. We start with the central bank at the top, and right now the central bank has reserve accounts. That's how they maintain the money supply to a large extent is with that account-based system. They maintain the reserves. The central bank would tokenize those that central bank or that reserve value. So the tokenization aspect of a CBDC does not create money. It just changes it from the form of a reserve account into a token. At that point, underneath we've got the commercial banks, which have deposit accounts themselves, and then those commercial banks maintain those deposit accounts on behalf of their consumers underneath, so consumers and merchants. So this is the traditional payment system right now. You have consumers, commercial banks, and central bank at the top. The blue lines that I just introduced are what would be known as the wholesale level of a DLT network, of a CBDC network. So this is just between the central bank and the commercial banks themselves. So what this demonstrates is that the central bank would tokenize the reserve balances that it holds and give those tokens to the commercial banks. Those commercial banks would then hold those tokens in a vault. And because this is DLT technology, it's a cryptographic key. And that requires the highest grade of protection and auditability and the whole key lifecycle that Securosys HSMs, among other HSMs, that needs to be an HSM at that point. And then underneath, for consumers, they also need a wallet. They need a digital wallet. So that could be the iPhone Enclave. It could be a smart card that they have. So we've got a number of digital devices at the bottom. Wearables, could be an anonymous card that is limited in terms of the value it can hold. But fundamentally, the cryptographic key the type of cryptographic key that is held on those consumer devices is the same type of cryptographic key that the banks will have to hold. It's just a matter of value and risk. So that's why at the wholesale level, HSMs will become critically important. And at the consumer level, there'll be much more consumer-oriented devices that hold cryptographic keys become important. Such a system also allows the central bank to perform analytics on the payment system itself, which is something new that they can't do today. Right now, the payment systems below are all privately run. So this is at the retail level and the consumer level, it's the MasterCards and the Visa networks of the world, or the twins of the world that operate that. A single ledger like this, where a token at the top issued by the central bank is the same token that's transferred at the bottom, same type of token, allows the central bank, if it's a desirable feature, allows the central bank to perform analytics in real time and have a much better visibility in terms of what's happening in that economy at any given moment. So between banks, they can perform wholesale settlement between each other. So they can actually move those tokens from one to another, which would be akin to an RTGS payment from one reserve account to another. But in this form, it would be tokens. But what this also allows is that the banks themselves can distribute those tokens down to the consumers. So the consumers can then transact. So the consumer can transact at a merchant and tap their phone on the merchant's point of sale and transfer those tokens directly to the merchant. That merchant then has the choice of when they decide that they are holding too much based on their risk appetite. They don't want to hold it on their POS. They want to provide it, have a trusted third party safekeep that key and those assets for them. They can go to the bank and say, I would like to deposit these tokens. And in that way, the bank would credit the deposit, the regular traditional account balance, and all of a sudden the account would go up, and that entity could receive interest and receive other incentives just in the traditional system. Or that merchant could decide, I would like you, the bank, to safekeep my key as a custodian. So I would like you to have it Securosys HSM and give me a key, allocate a key to me, and that will be my key. So that when I withdraw my funds, I will receive the same tokens that I put in. So it's exactly the same as like a safe deposit box today. You have cash, you can decide to walk into the bank and say, here's my cash, I'd like to make a deposit, and they'll take it, and then the bills become theirs, but you receive an account balance. Or you can say, I'd like to visit my safe deposit box, and you put it into the box. This is one ledger, this is one system, this is not two systems. So the like I said, the tokens at the bottom that are circulating at the bottom are the same as the banknotes, or the same as banknotes today. And also the tokens that are transferred at the wholesale level, at the bank, the commercial bank level, are the same tokens that would be transferred at the bottom. This is a map, Jen. Do you want to talk about this one in terms of the global projects?
Well, it's not just projects, basically just the state of what's happening around the world. So a couple of years ago when we started painting this picture, I just used it as a tracker just to say what's happening around the world and the activities in the CBDC front, both wholesale and retail, so those kind of projects. This is work that we've done, partners have been working on, and research that we've been privy to through our own sort of research team that's been focusing on this area. So this is just a collection of different activities. It's already out of date by the time we sort of put it up, because it changes on a weekly basis. But just to show you sort of where things are, if you take a look at these 4 stages: levels of interest, research, experimentation, and implementation. As I mentioned before, China is probably the first, and I have some very strict criteria for what actually is color coded and by which color. And by implementation, I mean it's large scale, it's out in the market, consumers are using it. There's actually in China, there's 4 banks that are using it and already using it in day-to-day transactions. And where other ones are still in experimentation phase, they'll tip, but it'll take a little bit more time. But just to show you that this is quite colorful. At the beginning of this project, or beginning of this sort of update process, it was all gray, and now it's becoming increasingly more colorful in terms of these activities, and it's definitely going into the red space pretty soon.
You'll notice Switzerland's in experimentation stage. Our friends at SDX, they're working with SIC, or with the S&B on the SIC network, and made a public announcement about that, and that's very good. SDX is using a Corda-based network and is actually using Securosys-based HSMs to back Corda, and I think it's a fantastic partnership that I think has evolved in terms of the evolution of the technology needing sort of production grade certified device, and I give Securosys a lot of credit in terms of the speed that was developed to support Corda, working very closely with R3. And I think that is also...
That's why we asked him to present here.
I think that's the type of production readiness that I think will move things from research and experimentation into implementation. One of the things we're seeing is that, and this is across the DLT space, so it doesn't, whether it's cryptocurrencies or digital assets or CBDCs, we're seeing the move towards implementation requires production level, enterprise grade aspects, non-functionals, performance, scalability, security. And most of the technology was developed, yes, it's using cryptographic functions, and yes, it's using hashes and a variety of security related features, but most of it wasn't done at the enterprise level. You walk into, if you're developing something for a bank or for a central bank especially, they're going to say, okay, we know what cryptographic keys are. We have a security team over here. We have a fleet of HSMs over here. Why wouldn't we put the keys in the HSMs and use them there? And that's, I think, where a lot of the industry needs to catch up. I think the industry needs to catch up, and that's where the technology, I don't mean to just plug Securosys HSMs, but I think that that's extremely, it's extremely useful for the features that you've implemented and in terms of supporting Ethereum, because that's not just public Ethereum. I mean, one of the key points is that when we talk about digital assets, it's like I said, it's digital assets, it's CBDCs, it's cryptocurrencies, but the technology and the support is mostly the same. It's about 95% the same, depending on which one you're doing. It's all just a function of legal standpoint in terms of what the asset actually is. So I think that there's a huge benefit and a huge head start, I think, in terms of that production readiness that the Securosys HSMs provide.
Can you go back one slide, then? Sorry, so on this one, just to point out, hopefully it's obvious that this is the vault where the HSMs for the banks, so the currency goes into. At the end of the day, you can see a scenario, just to be a little bit more, precise on the architecture. You can see a scenario that this is all done on demand, right? So the commercial banks ask the central bank to convert reserves into tokens, and so they don't hold it. So there may not be any HSMs at the central bank, or maybe a few of them, but ultimately they will be definitely held, in the commercial banks. They would definitely be held in there because they will be on demand from the clients, converting them and trading them, exchanging them for deposits into tokens to the consumers. It's unlikely that consumers will be holding HSMs at the end of the day. Some commercial entities might, but definitely in terms of in a jurisdiction, you would have all the banks holding a number of those in there. So that's why HSMs are a key part of the architecture at the central bank and at the commercial bank level.
And coming back even to the traditional payment system as it exists today in Switzerland, that wholesale, those banks have a Securosys HSM on the SIC network. And that transaction between those two banks that would happen to affect the reserve account, so one bank to another to update the reserve account balance, requires a signature on the SIC network. And to be a member of the SIC network, you have to have a Securosys HSM. So it's, like I said, they're familiar with, the central banks, the banks, they're familiar with HSMs. It's now just the evolution of the new DLT technology to support it. Part of that is what we've developed as Accenture is with some collaboration with Securosys using the TSB and the TE, which I know you've heard about in the last 2 days, a digital asset agnostic custody solution. And custody, not just in the sense of capital markets custody, but custody in terms of safekeeping. How do you ensure that the actions on a digital token are authorized? And what this flows down from is you've got the traditional platform at the top in terms of, we expect the financial institutions to already have fraud and risk management, already have a bookkeeping system for their clients that they're already running, already have reporting analytics, they already have those systems. So they need something to interface, which is already done with Swift messaging, but they need something to interface into the DLT space, whether that's CBDCs or whether that's digital assets or whether that's stable coins or Tether or anything else. So there's a system that is in the red here. So that what's allocated as number 2 is the DLT related components. So running the specific DLT nodes, whether that's Corda or Hyperledger Fabric or Ethereum or Bitcoin. Actually running the nodes is a burdensome process. Making sure DLT accounts is another word for wallets. So how do you manage the wallets? How do you affiliate those wallets to the customers at the top? How do you construct the DLT transaction? So not signing, because signing we'll deal with at the bottom. But how do you construct the transactions? How do you deal with token lifecycle management, the issuance and the destruction and the other actions that may happen? What if there's a fork in the public blockchain? You suddenly have new assets. Performing KYC and AML and onboarding specific to cryptocurrencies in this example, but also other assets, digital assets. And then the specific risk management associated with those tokens. As the tokens become more sophisticated and as those smart contracts become more complicated, there'll be specific ledger-related actions that may affect the risk of that specific asset. But purposefully, we've abstracted out the cryptographic signature and authorization step. And because we think that that's a separate component that should be done in an enterprise-grade HSM. So things like being able to support the key lifecycle management, the creation of the key, the distribution of the key, the usage of the key, the destruction of the key, backup and restoration. These are all things that have been around, those types of procedures have been around for decades. But many in the especially cryptocurrency space have tried to reinvent and end up right in the place in which HSMs have been doing it very well for a number of decades. And they support the human processes around that life cycle. And then the actual transaction signing. How can you ensure that transaction is signed properly? And that we've included in the box on the right, transaction authorization. This is where the smart key attributes come into play. how can you set up a number of handheld devices or automated agents? So, for example, running an Intel SGX, running a rule that Intel SGX enclave has its own public-private key pair that is an authorization key. It's not the key that signs the transaction, but maybe it's an authorization key that may require 2 other authorization keys to actually execute the signature that would happen on the native blockchain. Sorry, that's a lot very quickly. But it's a separation of the authorization from the actual signature on the DLT. So, and what that will allow, that functionality allows, is some very complex rules that can be built around, in the CBDC space, can be built around money flows and volume and certain times of days, certain time of the day that funds can be transferred, and by whom and to whom. All of that can be automated and done in a very secure way. But fundamentally, the question comes down to, where are those rules checked? How is that authorization provided that then provides or how the authentication provided to provide the authorization for that transaction? And we think that needs to be within the most secure device you can find, which is an HSM. And that's where I think the secure key attributes provide that functionality in a very innovative way. So what we've done is we've taken this component module and built an accelerator for digital assets to ensure the transfer and the deposit, sort of deposit, withdrawal, and transfer of digital assets are done in a secure way using a Securosys HSM that is detached from the rest of the application. And what that allows is to be able to plug into an existing custodian operation or go into an existing bank that wants to support CBDCs and wants to ensure that the movement of those funds only happens upon proper authentication and with proper authorization. And with that, I'll stop.
Okay. Thank you very much.
Thank you.
Thank you very much, John and Vincent. You can continue talking because you just lauded Securosys, and but it might get a little bit too much at some point. So I pretty much like the sand dollar. I mean, I have a whole box of sand dollars in my basement, so I want to participate there. We have a quick round of questions, and then we get to the panel. Any questions from the room here? Yeah.
So in terms of the Corda implementation, why did you choose Corda over a public chain like Ethereum or Polkadot or EOS, Tron, blah, blah, blah?
Sure, I'll start with that. So very good question. Many of the implementations that we've been looking at, sort of how to have it in a permissioned environment. So the public chains versus the private chains, it's a long-going discussion about this, of course. But the idea is that, of course, that the central bank is in full control of how that money is issued. It's permissioned. It's issued to commercial banks, and ultimately consumers that use it also are known entities that will be managed through a relationship through a commercial bank. There are, in that diagram, some examples of anonymous cards being used, but at all times, the endpoints or the wallets where they're being held are known, and so they're AML, KYC'd, and they're fully, authorized to be accessing the tokens and such.
But you can still do this on public chains.
True.
So
The issue, so there's the more complicated answer, and I'll jump into that. What we wanted to do is ensure that there's a very sort of tight coupling between sort of the approach that's been taken and permission DLTs and sort of the bank secrecy and the preservation of privacy between consumers and how they transact with one another. In a public ledger, all the transactions are visible to everybody at the end of the day. So you can see what's happening. And that, I think, from a cash perspective is not appropriate, because I would then be able to make some sort of analytics between how my money is being used across more broadly in the wider economy. In a permission DLT, you get many of the benefits of that, especially if it's a distributed ledger. You get many of the benefits of the bank secrecy that you have, so the commercial relationship that you have with your bank. and only the parties that are involved in the transaction get to see the transactions at all times. There's no other entity that can see it. We talk about analytics at the high end with the central bank, but that's only post factum. It's not during the transaction. They will be able to see that as well. So it's a very important distinction. And it was one of the key requirements for many of the more advanced retail CBDC projects that we've been working on. If the requirements were different, we would look at public ledgers, but we've not seen that for CBDC.
So there is chains that can do this for you. So Polkadot, you can go private, and then you can choose what's private and what's public as well.
True. There's many ways to answer that question as well, and what we wanted is the scale and then the ability to have the performance and the scalability as well, which we've done through the permission DLTs. So there's, it's always a balance between many different technology choices.
For sure.
Would you want to elaborate, Vince, or is
I
that?
dropped my microphone, but I mean, these types of decisions are not ideological. So they're all requirements driven.
So they're all requirements driven. So one of the other things that, so in addition to everything John just said, jurisdictional sovereignty is one of the prime aspects and the governance model of a given DLT network. And there are advantages to having sort of a decentralized or a distributed governance model, except if you're a central bank and you're the one that is responsible for the operation, the resiliency, and the assurance that the payment rail that is the foundation of your nation's monetary system is working. So there's an advantage in some circumstances to having centralization for some functions, and that is where, for example, Corda provides a lot of benefits that we haven't seen in public blockchains.
But it's requirements driven, and it's
Right.
important to state that. I think we've looked at it extensively through different sort of solutions in the market and stuff like that.
I think we can talk a lot about that in all these problems.
Yeah.
We have another question here.
Sure.
So you showed that the user himself can, on a handheld device or in some way, hold his own key. If the user, the end user, not via some bank or whatever, wants to know how much money he has secured by that key, how would he actually do that? What's his eye into the block, into the DLT that you're using?
His wallet would tell him the balance of what he's holding currently, right? So it's not just the key.
How does the wallet get that information?
So it's through the token. So maybe you want to elaborate a little bit more about how the tokens are being transferred.
Sorry.
Yeah. Drop the mic.
Yeah.
Yeah. So at all times the user's wallet will have the balance of tokens that are being held, and then they can tabulate that, and you know that you're the holder of those tokens. So you like a wallet would today, you'd be able to go through it and see the notes that are in there, and see that you can validate them and verify that they haven't been spent before.
Sorry. So in a Corda specific instance, so Corda has the concept of states, which is similar to, say, the Merkle tree and Bitcoin, so UTXO model. So Corda provides, a Corda state is just the amount of information that you need in order to prove the history of that token. So if I was transferring value to John, if I was doing a Bitcoin transaction, I would only need to hold my private key, and I would look to the public blockchain, and I could sign the unspent transaction, and then give it to John. And then John would then we'd publish it, and it would be fine. When he wanted to do that, the recipient John would pull it from the public blockchain and sign the tip. In Corda, I would be the only one that holds that state material, that holds that history. So I would have that history. I would sign the unspent transaction tip and then give that whole bundle to John. And then when he wanted to spend it, he would do the thing with the next step. So how to check your balance? If I had it on my phone, I would have the private key, and I'd also have the state material on there. And that would tell me how much my tokens are worth at that moment.
So I think we're getting in quite the detail here. So for a change, we're actually behind schedule. So first time, and if there is no urgent questions, John and Vince will be available during the reception when we have drinks.